Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Looks like you got a new location there today, AJ.
I am on the road. I am in Quebec City, Canada, French-Canadian Central. Mais oui, c'est bon.
Bonjour. Bonjour is the only word I know.
Bonjour.
So bonjour to all of our Canadian audience members. I know that we've got some fans in Canada.
Absolutely.
And I feel like we should dig right into the big news of the week, right? Because last week's show we were talking about these Fed numbers, and that anything over 50 basis points might be dramatic, and that's exactly what we got.
Well, and you got to remember that the Fed is going to raise rates, but then there's also the anxiety around raising rates, which has almost the same effect as raising rates. And so we saw that the Fed actually did go ahead and do a 3/4 point or 75 basis point rate hike. And they also, if you read between the lines, authorized more selling of those bonds at a faster rate. And again, when it comes down to technically what they're doing, that seems like it's going to have more of an effect than the rate hike. But again, there's the actual tactics that they're taking, and then there's also the effect of the anxiety around the tactics that they're taking. They both have an effect.
And so the market reacted initially. I believe we bumped up a little bit as a sign of relief. We have come back, and I feel like the market's still trying to figure out what to make of this.
Well, so think about this. So for the longest time, the Fed was talking about rate hikes, and they were talking about inflation, and they were talking about tamping down inflation. And what we were seeing in the economic reports is that there was no, people were talking about inflation, but we didn't see any reduced buying. People were just paying the extra prices for stuff, right? And that actually is something that the Fed has to watch out for, because what do you think you do? I mean, just put yourself into an average person's shoe who's hearing the hype around inflation. If you think that prices are going to go up dramatically tomorrow, what would you do today? Well, you'd probably stock up. And that's what people have been doing. So there's actually been an increased amount of buying because people are trying to capture the lower price before they perceive they're going to get higher. So that actually creates a bump in demand that the Fed now has to kind of sift through, because if the Fed corrects for that bump, then when the bump disappears, the Fed could have overcorrected, if that makes sense. So the Fed has a real interesting game, because not only do we have the variable of the skirmish, or whatever you want to call it, conflict in the Russia-Ukraine, which is screwing up everything from energy to food prices. And not only do you have always like the COVID shutting down factories, turning them back on and turning that spigot on and off instead of keeping it at a nice flow. So there's always supply pops and drops and hiccups here and here. But now you've got this bump in demand around the fear of inflation. And so we're going to have to see how the Fed navigates it. They went ahead and hit big with that 75 basis point rate hike, and the news media outlets are picking that up, and they're saying, oh my God, this is not it's been 30 years since we had this big of a correction. And so that's creating more of this hype. But what we're seeing in the numbers is just this week a reduction in demand for housing. And so maybe this is starting to have an effect. And so maybe this 75 basis point rate hike was kind of just what they needed to finally start seeing the effects. We just have to make sure that they're not going to overcorrect.
Yeah, and the market is taking it still trying to digest the information. But the consensus of what I'm seeing is that people are happy with the 75 basis points. It's the Fed doing what they need to do to stabilize things that are just growing, getting too
Too
expensive.
fast. Yeah. On right after the Fed announced it, there was a little pop up, and then yesterday there was a big drop off. Today it's kind of stabilizing. People are just digesting it. I've been saying this all along. If you put yourself on the correct side of the equation, you can turn this into a plus. So even though you might be feeling it at the grocery store, you might be feeling it at the gas pump, you might be thinking of, big purchases and putting them off for a little bit. You can, in your investing world, in your investing persona, turn this into a positive. And if people haven't yet, watched that movie from a few years ago called, what is it? Is it called Get Short? The one that was about the downturn 10 years ago, 2008.
Yes, short something.
What was that, Liza? The Big Short. I I
Big
I
Short.
would tell everybody, Liza's right here, of course, in the hotel room along with my little one who's asleep, but if we hear her scream, that means that she's woken up. The Big Short, I would give everybody the homework to go back and watch The Big Short, because one of the things that happened is they described those folks who were able to profit on the major downturn in the markets. And so there was a little bit, and the Hollywood played it up, but there was a little bit of conflict within the main characters because they knew that they were making a bunch of money in their investing life, but there were a lot of people on the wrong side of the transaction, like people who had gotten involved in buying houses that couldn't afford them, that were now, the wealth from them was converting to them. So there was a conflict in their mind. Hollywood played it up, but it was an interesting movie. And I recommend everybody go and watch it if they haven't watched it in a while or if they've never watched it.
Yeah, and even in that example, the way to profit was somewhat complicated because you were talking about like
Credit
um,
default swaps.
exactly, which the average consumer isn't, most often involved in, but our equivalent to that is options trading.
Options. Yeah.
Exactly.
If you're in the mood right now and you have the capacity to take on some learning, you can easily, with just off the shelf product, namely these derivatives, these options, you could easily be profiting right now. But if you're of the old mentality of I'm going to buy and hold, you're seeing your buy and hold portfolio drop drastically. I mean, I had some friends who have lost, close to 20-25% of their portfolio in just the last couple of months, and they're freaking out, but they're on the wrong side of the equation. All you have to do is pick up some new skills, some new tactics. It's not very hard. You could pick them up in a week or two, and next thing you know, all that lost wealth from the folks that don't know how to switch on a dime will be winding up in your coffers.
Yeah, and that's primarily why I chose this bear-ish type of background for this week's show because
Yeah,
I have been hearing some of the chatter of, oh, we're in a bear market. But for options traders, I mean, that's
that's
good. That's just more volatility. Some of the other points that you hit
absolutely.
on. But I feel like we should take a look at the chart real quick and see what that bearish move is that they're talking about. And I don't know, since we've kind of hit these new low levels, AJ, what's next on the SPX?
Well, the truth of the matter is we're happy, right? Because everything that we specified would be happening is happening. We wanted to see a move. Let me go ahead and expand this a little bit. We wanted to see a move below this 3,795 dollar mark, and we got it. And so it could move even further down on this move. It's already down to, and interesting, this morning it was a down day. It's already starting to level off. And we're already seeing, as you can see here from my momentum indicator, that the downward momentum is kind of like resisted. Now it's starting, so they're starting to push on the gas pedal to slow things down, right? We're still cruising into negative territory, but the gas pedal is starting to be pushed to get us to kind of come to a stop and start going in the other direction. And so, yeah, this is exactly what we want, or what we had figured out. It's not what we want. It's the pattern that we identified. And so long as this pattern keeps going, we're going to keep profiting with the strategies we chose to kind of take advantage of this pattern. The other chart I want to show you is the VIX volatility index. We like to watch this because a lot of people don't know this, but options can profit volatility increasing. And so as you can see, volatility right here, I zoomed out to 2 years just to get an idea of how high we've gone. We're back up to these levels here. If I zoom back into 6 months, you'll see here that volatility is kind of going up again. Hey man, options not only profit on down markets, but they profit on increased volatility. So we can get a double whammy here if you know how.
Yeah. And if these are any new words that anyone's watching and you want to get a little bit more insight into the strategies that AJ's talking about, we're going to go ahead and add a link to the webinar that you can jump in, and then we're going to go ahead and play our little up. We got a special guest.
She woke up.
The little one heard volatility.
She heard the word volatility. Yep.
VIX. Did Papa say VIX?
Did Papa say? She's going to be a stock trader as soon as she can speak.
So let's go ahead and invite everybody to the webinar. And then if anyone watching has a specific stock or ticker that you want AJ to go over, go ahead and leave it in the chat. Absolutely. Otherwise, we've got a couple from the guests, and we've got one that you're looking at with the members. So we'll be back in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ cruising around in his Tesla, not spending any money on gas these days.
That's right. Yeah.
All right. Well, I think before we go into your pick of the week, an interesting fact that you brought up this morning that I didn't know about was that Facebook changed its ticker symbol.
That's right. We watch a watch list here at Trading Trainer that is like some fun companies to watch, and one of them is Facebook, and they changed their ticker symbol for all of you that have been following Facebook. Now you want to follow META, Meta. That was their ticker change as of the end of last week. And then another ticker that we all have been following is Cerner Corp, kind of a company in logistics and databases around the whole shipping and trucking company, if I remember correctly. Well, Cerner Corp was gobbled up by Oracle. So Cerner is no longer a ticker on our watch list.
And I know Oracle's a name that we've gone over before. There's a couple of videos that we have. But your stock of the week, or something that you're looking in, is a company that I've never heard of, Dynatrace, right? Dynatrace, yeah. Ticker symbol DT.
Yeah. In fact, Dynatrace, I don't know much about it, but we have, for our users, for our program participants, we have some special tools, and one of them is a filtering tool that helps us find the candidates that we want to be trading options on. And Dynatrace actually came to my attention through one of our tools. And I'm going to pull this up on the screen here. So Dynatrace has, I'm going to look at, take a zoom out. So you can see that Dynatrace has fallen off of their highs, like many tech stocks have. By the way, Dynatrace is a tech stock. They're kind of a software company that specialize in taking some of the more complicated stuff like programming on AWS or Azure or all these cloud sites that, you require a computer science expert to be able to figure out, and putting layers of software above it that make it so that kind of the average small or medium business could figure out how to do that. So Dynatrace fell off their top, but you'll notice that they're starting to flatten out here, getting into the patterns that we like to trade as premium traders, but maybe they haven't completely matured into a sideways pattern. And so the question is is there a way for us to still trade it and trade its options? And the answer is absolutely. And so you kind of want to come up with a thought process behind um, easily adjusting the trading strategy to change on a dime. And so for Dynatrace, it's got this overall downward momentum over the last 6 months, but it shows it may have been finding a bottom. It has just topped out. In fact, it wasn't long ago that I got a signal on our fast MACD indicator to kind of give us a shorting signal. So that means when I say shorting, that's the underlying symbol. It means either I'm going to short the underlying symbol, or I could buy a put option that is equivalent to shorting. So if I don't want to short, because shorting requires that I have a margin account and an agreement with the broker, or maybe have some collateral or something on hand. If I want to keep this in my cash trade, keep it simple, or even do it in a retirement account, I'll instead buy some put options, go long some put options, which is equivalent to shorting the stock. So now would probably be a good time to be doing that. Now I'm doing it in my paper trading log because, as Sip pointed out, we don't have much experience with this company. So I always like to paper trade it first to become comfortable with it. If I'm going to start getting involved with a new ticker symbol, I got to get to know it first. I got to take it out for coffee. I got to take it out for some drinks before I get married to it, right? Or go away on a 2-week cruise where there's no way to go except jumping off the cruise ship. So I'm not going to just jump into this relationship. So I'm going to do some paper trading. But yeah, I think now's the time to short Dynatrace. And if we look over here at the option chain, man, there's a heck ton of liquidity. We've got so much liquidity that, whether we bought or sold options in all the different expiration dates, we'd be able to find something to buy and sell. There's thousands of open interest contracts. The bid-ask spread is doable. So, I'd want to go ahead and buy back month put options. And then depending on where it bottoms, if it bottoms probably below $25, when it bottoms, that's when I'll think about taking my profits and running. If it doesn't bottom below $25, if instead it bottoms like at 30 or 32.50, or even as low as 27.50, if it bottoms over here, well, then my idea would be to sell premium. And this is what I'm talking about, it being able to adjust the position on a moment's notice, depending on what we see. These type of strategies where we're profiting on the downturn, we're profiting on the volatility increase, but then if it doesn't go as far down as we want, we can profit on the premium. I mean, this is how we can manipulate options. This is what I teach.
Yeah, and it's like, hey, we want the stock to go down, market go down, so we can make more money.
Right. But also we're okay if the market kind of putters, right? That's the beautiful part. If it doesn't go down like we had first expected it to, and it starts to putter sideways, that's okay too. We'll make plenty of money if it's puttering sideways too.
Yeah, and paper trade, right? Take the stock out, get to know it. It's good to see a lot of liquidity in this one, even though we don't really know what the company is. That's great. So we're gonna go ahead and add this one to the watch list. DT.
Yeah,
Great
DT
pickup.
should be on people's radar.
Definitely looking like it has potential setup. All right, moving on to our next ticker. You mentioned earlier before the show that today's topic is technology. We got a slew of technology names here. So Jeff in Napa Valley is interested in Nvidia, a name that I am familiar with, ticker symbol NVDA.
All right. Okay. So see, a lot of these tech stocks, if you look at this pattern on this screen, a lot of these tech stocks have the same pattern. So if we go back a little bit, man, Nvidia was flying high. I'm going to come over here to a year stock. It had topped out around 313 a year ago. Let me see if it went any higher. Oh, yeah. Over here, this is November of 2021. They were up at $350 a share. And boy, has the mighty fallen. They are now down. They're at $150 a share. So they dropped almost 2/3 of their value. And I know, a lot of people have been putting Nvidia into their long-term portfolios and really enjoying the increase. So again, being on the correct side of the equation, if you're a buy and hold investor and you held on to Nvidia, you are, probably just biting your tongue right now because it's lost close to 2/3 of its value in just a couple of months. But being on the correct side of the equation and understanding how to trade it low, it looks like we've kind of found, or we're testing another level of support. So here's kind of my thoughts on Nvidia right now. My thoughts is if it is a level of support and we start seeing buying, don't be fooled. Don't be buying the stock thinking that you're reducing your cost basis, or they call it dollar cost averaging. Don't think that you're getting a deal right now because tech stocks can easily go lower. What I would do if I saw some buying is I would wait patiently for that movement. Let me see if I can load up my drawing tools here. Give me 1 second. There it is. And it'll take a second to load. But I'd wait for the buyers, the accumulation to pause. And at that next kind of top, that range contraction top, I would then consider shorting Nvidia, or since it is a little bit on the higher price, I would consider buying some put options against Nvidia. Not now, but when it tops. Now, if this bottom fails to hold and it starts to dip down below this level, if it goes down below 150, then that would be my signal to start buying puts now. But you'll notice the common theme in everything I'm saying is I want to buy puts. It just is the timing of when I buy puts. So again, if it goes down from here, buy puts. If it decides instead to pop up a little bit, fine, let it pop up, but don't buy calls, don't buy the stock. Instead, wait for it to top out and then buy puts. But we're going to play this down move. And then again, if it doesn't go down as aggressive as we want it to, it's always a candidate for that hybrid trade where we could sell premium every time it kind of stalls.
Yeah, and I have to imagine that 200 is kind of a psychological number that's that could play a good factor into that resistance there.
Round numbers always, are always psychological levels of support and resistance. And it looks like, just like you said, that 200 level played as a psychological level of support. And now the ceiling has become the floor, or the floor has become the ceiling, and it's going to play possibly as a psychological level of resistance. You're absolutely right.
All right, Jeff. Hope that was helpful. Appreciate the question. We do have a live question that I think is very pertinent in some of the chart analysis that you do. But Kathleen is wondering about the MACD setup that you have there at the bottom. And I know we've touched on it before, but you do kind of have a unique setup there.
Yeah, this is the fast MACD. So the father and son team over at the MACD group, have been talking about this fast MACD setup in addition to their usual setup. Let me go ahead and pull that up on the screen. And I love this indicator, by the way. So the fast MACD is based on a fast length of 6, a slow length of 19, and the MACD length of 3. This is in contrast to the standard MACD, which is a 12, 26, 9. So this is the 6, 19, 3. Now, I do like to use the fast MACD indicator to identify tops and bottoms. So whenever I get a crossing of the MACD over the MACD signal line, that's a red arrow or a green arrow. The red arrow means a top, green arrow means a bottom. So we haven't quite identified a bottom yet, but the question was, do I use the fast MACD? It's my primary indicator most of the time. And the way that I determine when I'm actually going to be trading a trade plan on whether or not I'll use the fast MACD or some other combination of indicators is through back testing followed by forward testing. So in other words, I'll back test my trade plan with that indicator and see if it would have worked out well. And if it would have, then that'll be my timing indicator in forward testing, meaning paper trading in real time with these indicators. And if I can make some money in my paper trading account using those actual indicators, then all bets are off. I'll go ahead and start using that with my real money trade. So I do like the fast MACD indicator.
All right, Kathleen, hope that was helpful. Continuing on our technology trend, I saw this name this morning, and the first thing I thought was boring, but that's what we like. And so Liz
like
from
boring.
Burlington, Vermont, wants to know about IBM. I mean, they may be the first tech company ever.
Yeah. IBM's been around typewriters, personal computers. Now they're big into the server space, and also like they're secretly doing some really cutting edge stuff on the artificial intelligence side. And I know that they've got a big place up in Burlington. So that explains why Liz is asking about it. And like you can see here with the stock price, IBM falls into that category of boring, which is exactly what premium sellers love, is sideways moving stocks when the rest of the market is either, going crazy up or crazy down. Sideways moving stocks will create an ongoing income for premium traders if they know how to sell the stock premium, how to sell, or the option premium, I should say. You'll also notice that IBM gives a absolutely terrific dividend, which makes the investors in the IBM stock kind of happy. They don't care that it's not appreciating because they know that if they own IBM stock, they're going to make money in a quarterly check. So cool. We like the IBM pattern. We notice that it's weathering this downturn quite well. In fact, it just continues to go sideways. We're at a bottom here. And just because the market has a lot of downward momentum, and even though IBM seems to be vaccinated against the downward move, I still am a little bit hesitant to suggest that we do any sort of buying IBM or buying of call options at this potential bottom. And again, going back to Kathleen's question about the fast MACD, I don't see that the fast MACD has even called this a bottom yet. Instead, what I'd like to do is trade at the tops. So I'd wait either, again, this is very similar to what we're seeing across the board. Either it's going to fall through this floor and never give us a bottom. And if it starts falling through this floor, this is when I want to start buying those put options. Or if it does find a floor here and starts heading up, then I'll just wait patiently. It looks like it takes about a week or two for it to run out of gas. And again, once I've hit a top, whether the top is here in this little pause, this reprieve, or whether it actually goes up some, I want to buy some put options. And then just to create some clarity for folks, what I'm talking about here is coming up with a actual guide. And, nothing's better than using a couple of fib lines. And again, I don't buy into the whole fib and Elliott wave that they're just some magic thresholds that appear in nature. I think that so many people use this technology in their trading that it creates a self-fulfilling prophecy. And actually, as a person who profits on the market, I don't care really how it works. I just care that it does work. It's a tool that's been tested and works. So who cares what's behind the black box or that's for like cocktail party talking. I don't care how the Fibonacci price retracement lines work. I just noticed that they work very well. So set up some Fibonacci price retracement lines here and decide which level I would like to see it go to. If it doesn't hit that level, then sell some premium. If it does hit that level and goes beyond, then sell the put and make some profit and move on to the next trade. It's that easy. It's kind of like a black and white robotic. This is my trade plan. I've planned out my trade, and now all I have to do is trade my plan.
Yeah, and I feel like I don't even have to ask you whether there's liquidity. I imagine there's tons of liquidity in this name.
Yeah, I didn't even look. We've been trading IBM. It's one of the candidates on our watch, tens of thousands of contracts, and this is on the July option. This isn't even on one of the options that's near term. In fact, if we take a look at the leap that's out in January 2023, I mean, you've got thousands of open interest. You'll have no problem finding buyers and sellers. There's a very healthy options market on IBM. So
Yeah, don't the only limitation may be it is a little more of an expensive name.
it
And
is.
yeah.
Let's see how much, for instance, if I were to buy a January 2023 put option, I'd be spending $12.30 a share right now. And that, don't forget that option shares are sold in contracts. So options are sold in contracts, which are lots of 100 shares. So I'd need $1,230 per contract. And I'd want to factor in risk. I wouldn't want to use my whole portfolio on this. So yeah, you're talking about needing a portfolio maybe in the 10, 20, even $30,000 range to be trading this. But that's fine. Many people's retirement accounts are at that size, and you can make a killing off of this.
Sure. And I imagine a lot of people already have IBM in their portfolios, so that premium selling is a strategy to help maintain any of those long-term positions. All right.
Absolutely. That's a whole other topic. Good point. For those people who are in long-term positions for buy and hold, like you've bought a bunch of GE or you've bought a bunch of IBM and you plan to hold them on these moments of kind of retraction, this is a great time for you to be selling premium, option premium, to turn these pullbacks or these contractions into gains, because we can sell premium and make some money in between. So whenever your long-term portfolio that you're just holding for 30 years decides to pull back, think about selling some option premium on the pullbacks.
Yeah, and that's exactly what you go over in your workshop, your daily workshop. So if anybody hasn't checked that out, the link is in the chat. Go ahead and jump in there, see the strategies, and get to know how AJ approaches options trading. All right, continuing on with our technology trend. I imagine that our next name is very similar to the name we just discussed previously, Nvidia chip maker, AMD. So Doug
Ah,
from Austin, Texas is interested in AMD, which I think is, well, nope, this is an expensive one too. At
this
some
is a
at one
little
point it was
cheaper.
pretty cheap. Yeah, at one point it was pretty cheap from what I remember.
Yeah, AMD and Nvidia are definitely competitors in the graphics world, I think. But AMD has also been giving Intel a run with their new processors, their Ryzen processors. I'm a fan of the AMD product. I'm also a fan of the AMD stock, but it hasn't been inoculated against the downturn. Again, I'm looking here at 6 months, but if we take a look at the last 2 years, you can see that Nvidia definitely was on a run, and then Nvidia definitely took some selling off. And you can see
AMD.
that. I'm sorry, AMD. Yeah, good point. I'm definitely old. So
Well, we were just talking
AMD.
about Nvidia. It's a fair mix up.
It's a fair mix-up. Yeah. So let's come on back to like a 6 chart here. So we see that pulling back, but now for the last month and a half, I think I said Nvidia again. AMD has it's maturing into a sideways boring trend. So here is where I would be thinking about selling premium. But again, I'm going to say the same thing I've been saying for all of these. If AMD finds a bottom here, I don't think I want to be buying AMD stock right now, not while there's so much correlation of sell-off in the rest of the market. So it's the same advice. The same advice is, let's watch what happens here. You'll notice the fast MACD has not given me a signal to say that I am confirming that a bottom has found. In fact, what I'm seeing here instead is kind of, some loitering, and we'll see what happens here. But if we decide that we will go down further, it's my opportunity to buy some put options against AMD. If I decide that, no, I have found a bottom and I'm going to go up, I'm not going to dollar cost average AMD. I'm not going to buy more shares. I'm not going to buy call options. What I'm going to do is allow it to pop up. And once it runs out of gas again and kind of jumps on board with the rest of the market selling off, that's when I'm going to buy some put options against AMD. So same advice pretty much across the board on all these tech stocks is if they decide to go down from where they are right now and we get kind of the confirmation that whatever floor they were trying to find over the last 3 or 4 days turns out to be a false floor, let's go ahead and short it or buy some put options against it. And if it does decide to find stability at that floor and goes up a little bit, hold off, wait till it gets out of gas, and then we'll go ahead and buy some put options this time. So the common theme is we're using put options to profit on the downward movement of price, and we're using put options to profit on the increase in volatility that we'll see every time there's a downward movement in price. So double whammy.
All right, Doug, hope that was helpful for you. Since you're talking about these common trends across the board, and we may get a little, pull up in this bear market, what would trigger that over the next couple of weeks? What do we need to see happen in order to see some sort of positive return in the market?
So, I'm not too excited or too bullish on any sort of positive moves up. But so in addition to using the fast MACD, another simple lagging indicator that I use, it's a little bit more, let me rephrase that. It has fewer false positives than the fast MACD, and it's simply a 3 and 5 day EMA crossing. Now, you'll notice I don't have EMAs. For those of you that are technical chart users, I don't have EMAs on my main chart, and I'm not looking for the crossing there. Instead, I've hacked the MACD indicator. So if you're not big on math, let me kind of break it down for you into some common speak. That's what I'm known for being able to do. When you have EMA crossings, what you're actually doing is you're subtracting a fast moving average from a slow moving average. And guess what? When you dig into the MACD indicator, that's basically what they're doing. You have a fast EMA. In our case, we're talking about the 3. We have a slow EMA. We're talking about the 5. And I'm basically negating the MACD signal line by making it 1. And so you'll notice on the configuration, and this is not just think or swim, most charting packages allow you to hack the MACD indicator. So this is a little mini lesson on how to hack the MACD indicator. You can change what type of moving average you're using. So if you wanted to do simple moving average crossings, you can, or weighted, or all these different varieties. We're going to stick with the EMA and putting the 3 as the fast and the 5. Now, when you plot this thing, notice it's a single line, and what we're looking for is the cross of the 0. Now, if I were to have 3 and 5 day EMA crossings on my main price chart, you'll see that when those two moving average crossings happen, you'll get a crossing of the 0 line down here. So this is just way easier to see. So if you're looking at moving average crossings, consider hacking MACD indicator. So what I would be looking for here is, and you'll notice I have a yellow line or an orange line here. I'm adjusting this orange line every time I get a new low close. So at the end of every day, if I have a new lower close, that's where this trend line gets extended to. And I'm waiting to find a confirmation of that low close. So you'll notice over here, we had a low close here, and it was about 4 days later that we got the confirmation of the 3 and 5 day EMA crossing. So we'll find the low close. So far that was yesterday, Thursday's low close. And I'm waiting to see a crossing of my 3-5 subtraction, my thing over the 0 line. When I get that, I'll know that a bottom has been found. And that's when I know that I'll see some buying, right? I'll see some accumulation. But again, because the overall market is a down market, I don't want to get excited about that accumulation. I don't want to think that I'm at the bottom of the barrel yet. I want to go, in fact, when I see that bottom found, I'll expect it to go about halfway up, wherever it is between the bottom and the top, halfway up, and then reverse back down again. So I'll actually be ready to play that next down move. So that's what I expect. I expect to see a bottom formed here and a little bit of a reprieve, a little bit of some accumulation, but only to about halfway. And then I expect some sell off again. I expect some sell off for probably the rest of this year, unless something happens over the summer.
Yeah, and we may have some improvements in some of the economic numbers over the next couple of weeks that would give you that pop. But from your perspective, it's definitely oversold. The technicals are giving it a little bit of room to bounce, but overall, we'll probably get a head down. We don't know, but we'll see. And either way, that's what the strategies are there for, to help take advantage and to help profit.
Being
All
on the
right.
correct side of that transactional equation for sure.
That's
Yeah.
right.
There's some more sell off to do to make the powers that be, and this is not just a US issue. You're hearing about this in Europe. In fact, Europe is having some bigger issues than we are here in the States or even here in Canada, because Europe, of course, has more commodity issues. They don't pump their own oil out of the ground like we do in the States and that Canada does in the Alberta province. We don't, they have to buy their oil from different places. And so they've got some issues there. They get all their food from places that are under conflict. And they also, one of the things the US did that helped our economy big time is they actually took on some fiscal policy decisions and injected cash into people's pockets, which a lot of the other organizations and central banks and countries did not do. They didn't do kind of these stimulus things to give people some money. So even though the folks in the US and the folks here in Canada are feeling some pain, rest assured you're not feeling as much pain as the rest of the world is. And I think that our recovery in the States will be faster than the recovery that's seen in the rest of the world.
So we'll keep an eye on that. The next Fed meeting is in 6 weeks. That's going to be another big one. We'll keep an eye out on the economic data. And next week, AJ, you'll be back in home territory, yeah?
Yeah, I'll be back in the United States, the good old Washington, D.C. area. I'll be suffering probably some of that heat and humidity that's known in the East Coast, Mid-Atlantic states, but that's cool. It's been nice here, but it's time for us to get back to our home.
Awesome. So we'll look forward to that. And with that, AJ, I'm not sure we got any more questions. Once again, if anyone's interested in checking out that webinar, going to go ahead and add the link again in the chat. If you've enjoyed the content, feel free to hit that like, feel free to hit that subscribe, that follow button. Add any questions you have there. We appreciate it. And with that, AJ, any final words?
I mean, again, we expect some summer doldrums. We didn't talk about that much this week. We expect some stall over the summer, which is great for premium trading. The key here, put yourself on the correct side of the equation, whatever the side of that equation may be.
All right. And with that, we will call it a show. Thank you, everyone, for tuning in. We'll catch you next week.
See you next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.